G'day. Thanks for watching. Let's have a quick look at the Dow before we take a serious look at the S&P and the Nasdaq. Now, here on the Dow, I have put a 20-day FLD projection, and if that breaks, then we may well get a break of the 40-day. And what does that mean? Well, the forecast of this 40-day FLD is into the 40-day zone, but it's a higher low than the 40-week low. So the long-term trend would still be intact if that was to occur. The other thing that we've got on here is an upward sloping 20-day valid trend line. And that has already been broken, which suggests that the 40-day high is in. Okay, that all fits together. I wanted to start with the Dow because it's the contrast between the Dow and the S&P along with the Nasdaq where the interest really does lie. So the monthly's the same. The weekly, well, let's bring some data in and see what the weekly is telling us. This is having a more serious pullback. It hasn't broken this 20-week FLD, and I think a break of that would cause some serious rethinking and a look at some alternative phasings. So we're not going to jump the gun. Let's have a look on the daily. Bring in some data. Rid of this old trend line. Now, the problem that we have here is this is well past where I would expect the 20-day low to be occurring. So one possibility, of course, over the last 3 trading days is that the 20-day low is still coming. That was possible. And the number one contender would have been the 12th of December, which is what I've got labelled here. Now, if that was the low, well, clearly it's been broken to the downside. We've got an FLD cross from the high through the FLD. That cross, that forecast, has been surpassed to the downside. We could put an upward sloping valid trend line through the low of the 12th of December, and clearly it's been broken. So the 40-day high is in. The difference with the S&P is that there's been no move to the upside, breaking the previous high here on the S&P, which means that this is left translated. This 40-day cycle is left translated, which suggests the ending low will be lower than the starting low. The other alternative, of course, is that back in here, somewhere around about the 10th, that was the 20-day low. And in that case, we did get right translation because the previous high back here on the 5th was surpassed with the high on the 11th. Now, it's too soon to be able to definitively say which of those scenarios is best. The other thing that we can do is we can work with our FLD projections and go from the high through the FLD. Let's assume that it's going to break tomorrow. This could take us as far back down as the low of the 21st of November, which on this phasing is labelled as the 40-week. Now, if price gets that far down, there's some serious rethinking that's going to happen. And the methodology there is to set up some possible alternative phasings and see which of those alternative phasings going forward make the best forecasts. All right, well, let's just quickly have a look at the Nasdaq. The Nasdaq is even weaker than the S&P. So the S&P didn't break into new all-time highs, nor has the Nasdaq. Again, where is the 20-day low? Let's bring some data in. And let's see what this market's done. The 20-day FLD target, you can see by eye, has been surpassed. Let's put a 40-day in. Well, that 40-day FLD forecast has almost been met, but importantly, the forecast is above the 40-week low of the 21st of November. Again, there's a possibility that the 20-day was back somewhere around about the 9th or 10th of December and not as I have it labelled on the 12th. The difference there is that if the low occurred before this most recent high, then this 40-day cycle will be right translated. Otherwise, it's forecasting left translation, and the difference there is right translation suggests bullishness. In other words, the ending low will be higher than the starting low, which is the 40-week low in this case. Left translation suggests bearishness, which means the 40-day low should be below the starting low, which in this case is the 40-week low on the 21st of November. We have to wait to see. When cycle phasing becomes unclear, the most important thing is having plan-based rules to deal with the uncertainty. If you want to understand how cycle forecasts are built and how alternative phasings are evaluated, there's more educational material available at futuremechanics.com. Now, from a trading perspective, when in doubt, either get out or stay out. Those sorts of concepts need to be included in your proven profitable plan if they aren't already. In other words, what do you do when your phasing is not making good forecasts? Do you just hang on? All needs to be thought about in the development of a proven profitable plan. Okay, thanks for watching.